You're standing in a Home Depot checkout line on a Saturday morning. The man ahead of you just spent $847 on supplies. You glance at his cart: drywall tape, a pipe fitting, and industrial-strength mold remover. He looks exhausted, his hands covered in paint. You think, that's going to be me next year, because you bought a house 3 months ago, and the seller swore everything was perfect. They lied. Americans collectively spent $526 billion on home repairs and renovations last year, more than the entire GDP of Sweden. Yet at the closing table, no one mentions this number. They tell you about the mortgage, the interest rate, the closing costs, but the financial avalanche that starts when you get the keys? Radio silence. Here's what happens. You buy a $350,000 house. Your mortgage is $2,100 a month. You did the math. You can afford it. Congratulations, you're a homeowner. 6 weeks later, the air conditioning dies during a heat wave. That's $7,000. 3 months after, you notice water staining on the ceiling, a roof leak for $4,500. Then the water heater sounds like a dying whale, $1,800. By November, 8 months into ownership, you've spent $13,300 on unforeseen repairs. Your emergency fund is gone, your credit card balance is climbing, and you understand why your neighbor always looks tired. This isn't bad luck. According to Bankrate's 2025 study, the average single-family homeowner spends $21,400 per year on hidden costs. That's $1,783 monthly on top of your mortgage, insurance, maintenance, property taxes, HOA fees if you're unlucky. These aren't optional. They're mandatory payments for owning a structure actively trying to fall apart. The real estate industry sold you a fairy tale. They said your mortgage payment is the cost of homeownership, but your mortgage is just the entry fee to an expensive casino where the house always wins, and the house is literally your house. Financial experts tout the 1% rule. Set aside 1% of your home's value annually for maintenance. For a $350,000 house, that's $3,500 a year. Sounds reasonable. Except this rule is catastrophically outdated. An Angie's survey found actual spending averages between 2% and 3% annually. That same house really costs $7,000 to $10,500 per year just for maintenance, assuming nothing major breaks. One homeowner budgeted $4,800 yearly based on the 1% rule, but actually spent $15,000. The 1% rule isn't advice, it's a comforting lie. Nearly half of homeowners, 46%, faced over $5,000 in unexpected repair costs last year. You can't budget for the unknown. Foundation issues can run $30,000, HVAC replacement up to $15,000, roof replacement averages $8,400. A NerdWallet study found 44% of homeowners had their first major surprise repair within the first year. 12% got hit in the first month. You haven't finished unpacking and your house is already extracting tribute. Over 60% of homeowners report being more worried about covering maintenance costs now than just months ago. These aren't people who bought homes they couldn't afford. They did everything right, saved, got pre-approved, bought within budget, and they're still drowning. Houses aren't like cars. They require constant feeding. Your roof, HVAC, water heater, windows, siding, foundation, everything deteriorates on different timelines. When those timelines converge, you face 5-figure repair bills simultaneously. Costs are accelerating. Home maintenance expenses increased across virtually every category last year. 7 categories saw double-digit increases from Q1 2024 to Q1 2025. Supply chain disruptions drove up material costs. Extreme weather increased repair frequency. Labor shortages made contractors more expensive. Interest rates on home equity loans made borrowing painful. It's a perfect storm, and your house is in the middle. Location makes it worse. Hidden home ownership costs in Hawaii average $34,537 yearly. In West Virginia, $12,579. The same house, same needs, but costs vary nearly threefold by zip code. New York City, $24,381. San Francisco, $22,781. Boston, $21,320. These aren't anomalies, they're the new normal in major metros. An Emergy and American Home Shield survey found 87% of homeowners needed professional help for a home issue last year, but over 33% couldn't afford repairs over $1,000. 15% couldn't cover repairs over $500. Read that again. 15% of homeowners, people who qualified for mortgages, don't have $500 for emergencies. They're not irresponsible. Homeownership is systematically more expensive than anyone admits. And we haven't discussed insurance, property taxes, or HOA fees rising faster than inflation, or special assessments that can drop a $20,000 bill in your lap with 30 days' notice. Maintenance is just the foundation. The real financial apocalypse is what's stacked on top. Property taxes compound the nightmare. The average American homeowner pays around $3,500 annually, up 4.2% from last year. That's $291 monthly before insurance or HOA fees. Property taxes rise with your home's assessed value. As housing prices climb, your tax bill climbs forever. The geographic lottery is insane. Property taxes vary up to 6 times between states. A $400,000 home in New Jersey costs $8,920 yearly in taxes. In Florida, it's $3,280, a $470 monthly difference for the same asset. High-tax counties reduce your buying power 10 to 20% on average. Non-mortgage costs, insurance, utilities, property taxes jumped 30% in 2025 alone, not gradually, and are expected to keep rising. Now add HOA fees. About 44% of all for-sale listings in 2025 were for properties in a homeowners association, double since 2010. The median monthly HOA fee rose from $118 in 2019 to $135 in 2025, a 25% increase in 6 years. Medians hide the real story. In disaster-prone markets, HOA fees exploded. Tampa up over 17% in 1 year. Orlando, Fort Lauderdale, West Palm Beach posted double-digit increases. Fort Worth jumped 14.6%, Sacramento 13.1%, Atlanta 12.2%. These aren't luxury buildings. These are average communities where master policy insurance skyrocketed 20 to 40% in a year, and HOAs passed the cost to owners. The psychological torture. Annual increases of 2% to 5% are considered normal to keep pace with inflation. Your HOA fee will never stay the same. It will always go up. Communities that don't implement regular, modest increases face larger jumps later or deferred maintenance that damages property values. You're trapped between steady bleeding and catastrophic hemorrhaging. Beyond regular fees, special assessments are one-time charges for unexpected building repairs. They can drop a $10,000, $20,000, or even $50,000 bill in your lap with 30 days' notice. No vote, no discussion. Pay up or lose your home. Try not paying and see who really owns your property. Consider a mid-range condo in a major city. Your monthly mortgage on a $450,000 unit might be $2,200. Add $400 in property taxes, $350 in HOA fees, $150 for insurance, you're at $3,100 before utilities, maintenance reserves, parking, or other nickel and dime charges. And all those numbers, except your mortgage, are rising faster than your income. Florida condos are the canary in the coal mine. In parts of South Florida, HOA fees now range from $1,000 to $2,000 per month, not per year. Combined with rising insurance, property taxes, and mortgage rates, monthly costs for a mid-range unit easily hit $4,000 to $6,000. Meanwhile, a comparable one-bedroom in a luxury rental building leases for $1,600 monthly. Renting is 40 to 50% cheaper than owning. You save thousands annually while avoiding property taxes, HOA fees, and maintenance entirely. The math has inverted. Ownership has become the expensive option. Indian River County data shows single-family home sales up 12.9% year-to-date, while condo sales plunged 17.8%. Cash buyers dominate the remaining transactions. Out of 176 condo closings in Q1 2025, 133 were all-cash deals. Finance buyers can't make the numbers work. Only people with liquid capital can absorb these costs without drowning. Budgeting rules are lies. Experts say set aside 1% to 4% of your home's value annually for maintenance. For a $200,000 home, that's $2,000 to $8,000 yearly. Sounds reasonable until you track actual spending. One homeowner budgeted 1%, $4,800, but spent 2 to 3%, $10,000 to $15,000 every year. Guidelines don't account for the water heater failing the same month the roof needs repair, or the HVAC dying during a heat wave when contractors charge emergency rates. The average homeowner spent $3,018 on maintenance and $2,321 on emergency repairs recently, $5,339 combined. But homes built before 1960 cost 8% of home value annually to maintain. Buy a charming $300,000 Victorian, and you're looking at $24,000 yearly in maintenance. The character comes with a price tag that'll bankrupt you. Your house isn't an asset, it's a liability with an appreciation kicker. Assets put money in your pocket, liabilities take money out. Right now, between maintenance, taxes, insurance, and fees, your house is extracting wealth faster than it's building equity. 87% of homeowners experienced a home issue needing a professional in the past year. Over 33% couldn't cover an emergency repair over $1,000. 15% couldn't swing one over $500. More than 1 in 3 panic when something breaks. Nearly half say stress from mandatory repairs has increased since the start of 2025. Over 60% are more worried about covering maintenance costs than just months ago. This isn't a poverty problem, it's a home ownership problem. The system sold you the dream: white picket fence, equity, generational wealth. They didn't mention becoming a full-time project manager for a money incinerating machine that breaks on schedule. The HVAC dies during a heat wave. The water heater floods your basement on Thanksgiving. The roof leaks during the one storm your insurance calls an act of God. Foundation repairs range from $2,200 to $8,100 for basic fixes. Full lifting can hit $30,000. Replacing a 1,200 square foot roof averages $5,700 to $12,000, with most spending around $8,400. But 2025's higher material costs and labor shortages are driving numbers higher. A new HVAC system runs $7,000 to $15,000, not including ductwork or electrical updates. Plumbing emergencies cost $120 to $300 per hour nights and weekends. Roof repairs start at $150 for minor issues and climb to $6,000 plus for extensive water damage. HVAC repairs average $150 to $450, with service call fees of $75 to $200 just for someone to show up. The average household spends nearly $4,000 yearly on unexpected repairs. If you own an older home, multiply that by 3. Homes built before 1960 have the average annual maintenance costs at 8% of home value. Buy that $300,000 Victorian, and you're spending $24,000 yearly to keep it from collapsing. Year-over-year spending for home renovation and repair is predicted to reach a record $526 billion by Q1 2026. It's not that people love spending on grout, it's that once you start, you can't stop. Replace the cabinets and the appliances look ancient. Replace the appliances and the floor looks terrible. Replace the floor and the paint looks dingy. 7 categories of home care saw double-digit cost increases from Q1 2024 to Q1 2025. Supply chain issues created material shortages, extreme weather drove up repair frequency, labor costs exploded. Interest rates on home equity loans made renovations more expensive to finance. You're paying more for everything while raises don't keep pace. The typical single-family home costs over $21,000 yearly to own and maintain. Homes in New England cost twice as much as homes in the southeastern United States, $13,130 versus $6,270. Same country, double the cost. Location isn't just about purchase price, it's about the ongoing extraction rate. Buying new construction? Newer homes cost 2 to 3% to maintain instead of 8%, but newer home prices are significantly higher. You're still writing the same size checks. You've traded old problems for expensive problems wrapped in modern finishes. So what do? I'm not telling you to never buy a house. I'm telling you to stop treating homeownership like a magic ticket to wealth. It's a leverage bet on appreciation while you pay rent to the bank, the government, the HOA, and entropy. If appreciation doesn't materialize, if the market stays flat, if your neighborhood declines, you've paid a premium to own something extracting your wealth instead of building it. Run the numbers on a typical $400,000 house. You put 20% down, borrowing $320,000 at 7% interest. Your principal and interest, $2,130. Add realistic taxes, insurance, HOA, and maintenance, and your total monthly cost is $3,413. You spend $40,956 yearly just to keep the house standing. Now the opportunity cost. Invest that $80,000 down payment in an index fund for 30 years at 7% and it grows to $609,000. But the real magic is the monthly difference. Renting a similar spot might cost $2,000. Owning costs $3,413, a $1,413 monthly difference. Invest that monthly difference every month and you retire with $1.6 million in liquid, accessible wealth. The homeowner has a house worth maybe $850,000. After paying 6% to sell, they walk away with $799,000. The renter has $1.6 million. Yet we're programmed to believe the renter is the fool. The alternative isn't glamorous. Rent. Invest the difference between ownership costs and rent into actual assets that don't need gutter cleaning. Max out retirement accounts, build a taxable brokerage, stack cash in high-yield savings. When you rent, the roof, HVAC, and special assessments are someone else's problem. You pay one predictable bill monthly, and your money compounds instead of evaporating into contractor invoices. Homeownership isn't evil, it's just expensive, prohibitively so for many told it's the only path to security. Real security comes from understanding the full cost structure before you sign, from running actual numbers instead of trusting real estate agents' fantasy projections, from recognizing the American dream has property taxes, insurance premiums, and maintenance schedules. Nobody's rescuing you when the foundation cracks. The house doesn't care about your budget. It will break. You will pay. The only question is whether you plan for it. So run the math before falling for granite countertops. Calculate what you'll actually pay monthly after taxes, insurance, HOA fees, and realistic maintenance. Compare that to rent. Be honest about whether you're buying a home or buying into a story about what homeownership is supposed to mean, because the house will take your money either way.